Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. A very good day to Madam Masniza and my fellow classmates. Okay, today me and my friend going to present about chapter 25, other insurance services. Okay. Uh, for your information, from before we go further about this chapter, I would like to share to you all that this chapter have about 8 objectives that will me and my friend represent to you all. Okay, for my part is for the learning objective one, which is understanding the level of assurance and evidence requirement for review, compilation, and preparation services. Okay, next slide. Okay, uh, firstly, if you want to understand the level of assurance and evidence, we must know about the three main things, which is review, compilation, and preparation services. Okay. Uh, The statement on standards for accounting and review services (SSARS) is the represent the standard of preparation, compilation, and review engagement of financial statement, which is the SSARS is issued by the Accounting and Review Services Committee of the ICPA. Okay. Because of the assurance provided in a preparation, compilation, or review engagement is considerably below that audit and less evidence is required for these services, and they can be provided at a lower fee than an audit. Okay. Uh, for to get more information about what I just said, you can refer to the next slide. Okay. This slide, bar chart, you can refer from textbook page 752, figure 25.1. Okay. From the graph, we can see the relationship, the graph about the relationship between evidence accumulation and assurance attained. This is the amount of evidence accumulated is for the fighting vs the level of assurance attained, which is when the amount of evidence is zero, so there's no need to compilation or preparation services. Okay, but when the amount of evidence is significant, so there's a certain limited when to the level of assurance, and when the amount of evidence is extensive, so highly the company must do the full audit process. Okay, next. Okay. Review services. A review engagement is designed to allow the accountant to express limited assurance that the financial statement are in accordance with GAAP, which is the procedure to do, which the procedure is consist primarily with two things, which is inquiries of management and analytical procedure. So for view reviews, accountant do not obtain an understanding of the internal control, test control, or asset fraud risk, or do substantive test of transaction or test of balance. So next, uh, okay, to do to do this review, the accountants or auditor must have followed this below procedure, which is firstly, the auditor must obtain a knowledge of the accounting principle of the client industry. Second, need to obtain the knowledge of the client and then make inquiries of management, then perform analytical procedure, after that obtain letter of representation, and finally prepare a documentation. Next. Okay. This slide, you can see this is a example of the form of review report. As you can refer to textbook page 754. Okay. This is the example of review report made by accountant. Okay. At the at the report, you can see there's four paragraph. There's every paragraph at its own purposes. Okay. The first paragraph is about introductory paragraph, which is identify the entity like stating the company name or the period of financial statement subject to review, and explicitly notes or something like that, such as like return cash flow or other state of income. Okay, second paragraph is about management responsibility, which is for the so the report will state about the management responsibility for the preparation and fairness of the financial statement, for designing and implementing and maintaining the internal control relevant to the financial reporting. Okay, the third paragraph is about the accountant responsibility, which is the accountant itself is comply with the SSARS regarding to the reviewing the management financial of statement. Okay, so the last paragraph is about the accountant conclusion. So the accountant will be expresses their limited assurance in the form negative or assurance that maybe they do some give some advices or like or do some review like they're not aware of material modification that should be made to the accompanying the financial statement. Next. Okay. Okay. Compilation services. This is okay. Bank inquiries on the management. Compilation service. Okay. A compilation engagement is defined in SSARS as one in which accountants apply accounting and financial reporting experience to assist management in the preparation of financial statements and issue a report to a client or a third party without providing any CPA's assurance about the statement. Which is the requirement for the compilation is uh, next slide. The requirement for completion is firstly document services to be performed and a description of the report. And then know the industry accounting principle and the practice. The auditor must know the client, and then the auditor also must determine whether the client information is satisfactory, and they need to review the compiled financial statement of any obvious omission or error in mass and GAAP. Okay. To form a compilation report, so there are three type of compilation report, which is the first one is compilation with full disclosure. Second is compilation that omit substantially or disclosure. And the thirdly is the compilation without independence. Okay, for the first one, you can see from the figure in for figures 35.3, page 756. And then the second type of the compilation for omit the substantiation or disclosure. You can see from next slide. Okay, and you can also refer to textbook 756, figure 25.3 and 25.4. Okay, all you to need to know about the compilation compilation report is about that is used to each or depend on whether management elect to include or the record disclosure with the financial statement and whether the accountant is independent. So, in the form of report, the title must say accountant's compilation report, and then must state a date of the financial year account, and then every page of compile must be see have the note see accountant compilation report. Okay, and finally, if client fail to follow the accounting standard, auditor must include the same modifications in the compilation report that used to review report. Okay, that's all from me.
Okay, next. Hi, my name is Noreen. So today I'm going to present learning objective 2, which is special engagement to review interim financial information for public companies. Okay, for the first point, the Security Commission required that quarterly financial statement to be reviewed by the external auditor company prior to the company filing of the Form 10Q. So the Security Commission also required a footnote in the annual audited financial statement that require their disclosing quarterly sales. Next, gross profit, income, and earning per share for the past 2 years. So, my next point is CPA firm must perform review procedure of the footnote information because the same CPA firms does both the annual audit and the public company interim financial statement review. This shows to the auditor and not to the accountant for the interim review. So, under SARS public company interim review include 5 requirements for the review service engagement. Okay, first, obtain knowledge of the principle of the client industry. Second, obtain knowledge from the client. Third, make inquiries of management. Fourth, perform analytical procedure. And lastly, obtain letter of the representation. So next, the interim public company review will be performed under following standard of the PCAOB, and there's no and make no reference to the SARS. Next, for example, each page of interim financial information, which is accompanies the report, should be clearly marked as unaudited. So, lastly, if the auditor determines the interim statement violate accounting standard, then the report must be modified. Thank you.
Okay, next, I will explain about the distinguish AICPA attestation standard from auditing standards and know the type of engagement to which they apply. Next. Okay, AICPA is American Institute of Certified of Public Accountants. So, attestation engagement, I will explain three parts, which is attestation standard, type of engagement, and level of service. Next. Okay, for the attestation standard, it issue 11 attestation standard that parallel the 10 GAAS. GAAS is generally accepted auditing standard. As you can see, page 759, in the left side, which is attestation standard, have 11. Then at the right side, the AAS has 10. So, example, which is for the attestation standard is the practitioner must have adequate technical training. But for the GAAS is the auditor. Attestation standard is all for the practitioner and the GAAS is for the auditor. Then, auditing standard apply to attestation that deal with the providing assurance of historical financial statement, including one or more parts of the statement. Then for the attestation standard, they have their own general standard, but for the additional guidance, they add the ASB of the AICPA issue statement of standard for attestation engagement. Next. Next. Okay, for the type of engagement, they have several type of engagement. First, the ASB decide not to attempt to define the potential boundaries of attestation engagement except in conceptual terms because new service are likely to arise. So, AICPA and CICA, which is Canadian Institute of Chartered Accounting, jointly developed the insurance services. So they use new standard using the Web Trust and Trust. Web Trust and Trust will explain by the next presenter. So the standard is necessary for the start engagement because next they have several types of engagement, which is prospective financial statement, reports on internal control at service organization, pro forma financial information, report on IC control over the private company. Next, compliance with law and regulation, agree upon procedure engagement, management discussion and analysis. This is the new standard that we use using the Web Trust and the Sys Trust. Next, okay, for the level of service, they have 3 levels of service, which is examination, review, and agreed upon procedure. Next. Okay, for the examination is the positive conclusion, which is CPA makes direct statement whether the presentation of the assertion conform to the applicable criteria. So the CPA direct make the direct statement. For the review is the negative assurance, which is CPA state whether any info come to the CPA attention to indicate that the assertion are not presented in all material. Means like they not conform with the they not follow the applicable criteria. Next, for the agree upon procedure, which is finding. Finding means all procedure will perform are agreed by the CPA. But they must have responsible party making the assertions and specific person who are intended user of the CPA. So means they have all the procedure that are agreed by the CPA, but they need some specific person to intended user of the CPA. Next, thank you. I will pass to the next presenter.
Okay, so for the fourth learning objective is understand the nature of web trust and sys trust assurance services. Next, most organizations rely heavily on the use of information technologies to conduct business, including the use of the internet to buy and sell goods and services. So for more reliance is placed on information systems, business people often demand greater assurance about their accuracy, availability, and security. So web trust and sys trust are examples of attestation service developed to address these assurance needs. So a web trust service is when a client engage a certified public accountant (CPA) to provide reasonable assurance that a company's website complies with certain trust services principles and criteria for one or more aspects of e-commerce activities. So what is web trust services? Is a specific service developed under the broader trust service principles and criteria jointly issued by the American Institute of Certified Public Accountant, ICPA, and Canadian Institute of Chartered Accounts, CISA. So the CPA firm assesses whether the company's website complies with the five trust services principles. So next. So there are five trust services principles. The first one is security. Security practices ensuring that the system is protected against unauthorized access for both physical and logical. The second one is availability. Availability practices ensuring that the system is available for operation and use as committed or agreed. The third one is processing integrity. Processing integrity ensuring that system processing is complete, accurate, timely, and authorized. The next one is online privacy. Online privacy practices ensuring that personal information obtained as a result of e-commerce is collected, used, disclosed, and retained as committed or agreed. The last one is confidentially. Confidentially practices ensuring that information designed as confidential is protected as committed or agreed. So next. So sys trust services. The sys trust services is licensed. CPA evaluates a company's computer system using trust services principle and criteria and determines whether controls over the system exist. So an unreliable system can trigger a chain of business events that negatively affect the company, its customers, suppliers, and other business partners. So the sys trust service provide assurance to management, the board of directors, or third parties about the reliability of information system used to generate real-time information. If the system meets the requirement of trust service principles and criteria, an examination level unqualified attestation report is issued under ICPA attestation standards. So I'll pass to the next presenter for the next objective.
Okay, for next learning objective 5, I will describe engagement to report on internal controls at service organizations. Okay, next. This is historically referred to as SAS70 engagements because the guidance for service auditors was contained in that auditing standards. The Auditing Standard Board recently moved the guidance for service auditors from auditing standards to the attestation standards. Those standards provide guidance for service auditors who are engaged by a service organization to issue one of two types of reports. Okay, next. Uh, they have two types of report. Type 1 report is report on the design of controls, and Type 2 reports on the operating effectiveness of controls. Okay, next. Okay, for Type 1 report, the service auditor express on an opinion about the fairness of the descriptions of the service organization systems and an opinion about the sustainability of the designs of controls in the systems. The service auditor also obtains and reads the system descriptions prepared by the organization's management and assess whether the description is fairly presented. In making that assessment, the service auditor evaluate whether management used suitable criteria in preparing and presenting the organization's system descriptions. Okay, for example, the service auditor will evaluate whether the organization's description includes information about procedures by which transactions are initiated, authorized, recorded, processed, corrected, and protected for users, entities, and the related accounting records prepared to support this process. Okay, next. Okay, the service auditor also performs procedures to obtain sufficient available evidence to obtain reasonable assurance about the suitability of the designs of controls. In making the decisions, eva- service auditor evaluate whether controls have been designed to address risk threatening the achievement of control objectives and whether those controls, if operating as described, provide reasonable assurance that those risks will not prevent achievement of control objectives. Okay, next, for type 2 report. Okay, for type 2 report, the service auditor performs tests of the operating effectiveness of the controls at the service organizations. When testing controls at the service organizations, the service auditors perform tests of controls using procedures similar to those described in yearly chapters to obtain sufficient appropriate evidence about the operating effectiveness of those controls throughout the period under audit. The service auditor's Type 2 report contains the two opinions about the descriptions and suitability of the designs of control that provided in Type 1, plus an additional opinion about the operating effectiveness of controls throughout the period. Okay, I would like to pass to the next presenter.
I'm going to explain about prospective financial statement. Next. So, which is under prospective financial statement, there is have a two, which is forecast and projection. So, prospective financial statement refer to predict and expect financial statement in some future period, which is income statement, or the same future date, so which is the balance sheet. So most CPA believe that there is a significant opportunities and potential risk for auditor to provide credibility to prospective information. So if auditor can improve the reliability of the information risk may be reduced in the same way is in audit of historical financial statement. So the risk arise because the actual result obtained in the future may differ significantly from the result predicted in the prospective financial statement. So what is the forecast and projection? Under AICPA, American Institute Certificate Public Accountant, attestation standard define two general type of prospective financial statement, which is forecast and projection. So forecast is expected, projection is a given one or more hypothetical assumption. So means they give their opinion or assumption predict on the financial statement. So forecast is a prospective financial statement that present an entity expected financial position, result of operation and cash flow. So which is the lender asks the company. So the company asks to about actual forecast of the financial statement by CPA firm. For projection or prospective financial statement that present entity financial position, result of operation and cash flow given one or more hypothetical assumptions. So which is what I mentioned just now. It's about they give their assumption and prediction on the financial statement. So for useful of prospective financial statement, which is they can for forecast, they can be provide for both or general and limited use. For projection, it's restricted to limited use. So what is the general use? It's a responsible party to negotiating directly. Limited use is a responsible party is negotiating directly. So which is their So general use, positive rationale refer to use a statement by person who responsible is not negotiating directly. For example, is offering statement on entity debt or equity um, interest because a recipient prospective financial statement distribute to general use as unable to ask the responsible party directly about presentation, and the presentation most useful to them in one that portray to the best of the responsible party knowledge, belief and expected the result. For limited use of prospective financial statement refer to the responsible party alone or by responsible party and the third party with who responsible party is negotiating directly. So example include the negotiation by bank loan. So submission for the regulatory agency and use the social media entity. So third party recipients are prospective financial statement and intent for limited use can ask question of the responsible party the negotiating terms directly within any type of prospective financial statement that will be schooled on the second term will normally be appropriate to for limited use. So second is type of engagement, examination. Examination is a completeness and reasonable for examination, completeness and reasonable of the assumption. So the auditor or extension engagement in which the CPA obtain satisfaction as to the completeness and reasonable for all the assumption. For compilation engagement in which the CPA is primarily involved with the computation accuracy of the statement. So which is they are just give the right amount of the financial statement. So that not the reasonable of the assumption. So just give the computation accuracy on the statement. So the last type of engagement is agree upon the procedure which the CPA and all user the statement agree upon the specific means follow the accounting policy. Next, next examination of prospective financial statement. So first, evaluate the presentation of prospective financial statement. Second, evaluate the underlying support or assumption. Third, evaluate the presentation to conformity with the AICPA guideline. So lastly, issue an examination report, which is their give their report, give the assumption on their report. So that's it for me.
Okay, so we proceed to learning objective 7, which describe agreed upon procedure engagement. Okay, next. Agreed upon procedure engagement happen when the auditor and management or the third party agree to limit the audit to specific audit procedures. Many CPA will refer to these procedures and finding engagement because the result emphasize the specific audit procedure and perform the finding.
autos completed procedure. Okay. This procedure engagement appeal to CPA, which management and other parties will specify the procedures they want to done. They want to do. Okay. For example, federal agency want to audit want to specify 10 audit procedure. So um, the CPA will satisfy the agency. So the later engagement will be much easier. So that if federal agency and management, federal agency and CPA agree um, with this procedure, so many CPF firm will are willing to perform this procedure and issue a report of the related finding. Okay, next. Okay, so there are two primary professional standards, which is mirror standard. AU622 is auditing standard, which is it is deal with financial statement item. C01 analysis standard, which is it deal with non-financial cases. Next. Okay, so for auditing standard, CPA might do a agreed upon procedure on the gross sales account for a lease agreement. So a report for such engagement will describe the thing. So for attestation standard, the CPA firm will calculate the IRR, which is internal rate of return, data risk for measuring the volatility, and other relevant information of interest to investor for a mutual fund. Thank you.
Okay. My name is Megat Hazim. Okay, I will continue with to describe other audit and limited assurance engagement related to historical financial statement. Okay, other comprehensive basis of accounting. Okay, that is for which is cash or modified cash basis. Okay, only cash receipt and disbursement is recorded. Okay, on tax basis, it applies the same measurement rules used for tax filing return, as well as are often used for financial statement preparation. Okay, on the cash modified cash basis, okay, I have an example for you guys. Okay, did you know our government previously using this method? Okay, but now it start to move to accrual basis. Okay, okay, the third one is a definite set of criteria. Okay, here I put it the price level basis of accounting. Mean here to maintain account in which all items in financial statement are recorded at current value or adjusted historical cost. Okay, the last one is regulatory agency basis. For example, common example for this one is a uniform system of accounting account required for railroads, utilities, and some insurance companies. Okay, let's move to the next subtopic is a specified element account or item. Okay, auditors are often asked to audit and issue reports on specific aspect of financial statement. Okay, why? Okay, because okay, this when it says specified, okay, it pretty much the same as ordinary auditing ordinary financial statement, except it apply less than the normal one. Okay, let's continue. Okay, there is two different type of audit, which is materiality defined by the item audited. Okay, let me explain a little bit regarding this. Okay. Uh, it defined in terms of element, account, or item being audited rather than overall financial statement. But it required more evidence than the item being verified is one many part of the statement. Okay, next is GAAP, which is stand for generally accepted auditing standard, which is will be give a guideline to an auditor how to audit set of financial statement. But in Malaysia, as you know, we have MASA, which is nation approved standard on auditing. Okay, GAAP does not apply because in the presentation of element account or term is not in financial statement. Okay, for example, when you only audit sale, the presentation part will be not relevant and will be not relevant. Okay, in the extension of audit effort to include other element, account or item integrated with those being audited. Example, opinion on sale or other account receivable also can be considered. Okay, next is regarding debt compliance letter and similar report. Okay, auditor can observe around this item. Okay, the engagement and report should be limited to compliance matter. The auditor is qualified to evaluate. Okay, the auditor should provide a debt compliance letter only for a client for whom the auditor has done an audit for overall financial statement. Okay, what the statement trying to say is, okay, if an auditor, okay, the compliance letter will be only issued after the auditor have made an have done the audited financial statement for the year. If not, then cannot issue the debt compliance letter. Okay, is purposely to evaluate whether the accounting record are adequate. Okay, as well as if the item mentioned not in the business, it is not qualified when the business activity properly restricted in the agreement. Okay, the auditor opinion in this form of negative assurance stating that nothing came to the auditor attention that would lead the auditor to believe there was non-compliance. Negative assurance means the auditor is not aware of any issue. Okay, for debt compliance and similar report, okay, I will give you an example. Okay, if a client want to apply for a loan with bank, okay, bank will ask for compliance letter to ensure that they can pay off their debt. So there is no need for a collateral. Okay, that's all from me. Okay, thank you.